What's up, everybody? Welcome to the weekly close live stream. I was just in the intro starting to update this chart in TradingView. This was a halvening graphic chart. This was something I started making years ago. Nowadays, there's far more interesting and compelling graphic representations of the halvening cycle and what it can do to price. But this is something I haven't updated in several years. And in fact, if you go back through some of my old TradingView stuff, one of the first, let's see if I can find it actually, one of the first halvening articles where I tried to do some graphical representations of it. Let's see if I can find by tags. Show all tags. Okay, H, can't do a fine. Having, there we go. Halvening, let's see, find it for me. Okay. Yeah, one of the first ones I did was, no, that's not it. That's earlier. Oh, I know. Let's click on this one in TradingView. I think I have a video here and a link to, yeah, 2016 was when I started trying to understand the halvening cycle and what it meant to the future of Bitcoin. A lot's happened since then, actually. And so we're going to come up now. Topic of this discussion is going to be Microstrategy today. And Microstrategy, if you don't know, is a company that focuses on two things. One, business intelligence software, which actually, as a business, loses money. And the second one is taking out debt to buy Bitcoin. Now, it's been very debatable if that is a good strategy or not a good strategy for the champion of this company, the former CEO. Now he's moved down to a cheerleading role. I'm not sure what his role is now, but his job now is to just promote Bitcoin, which is basically talking his book. And full disclosure, I am talking my book because as I posted in my Discord this week, I have taken out a put position on MicroStrategy based upon a longer term thesis that I've had about his MicroStrategy's strategy of taking out lots and lots of debt to purchase Bitcoin. Now that's made him the hero among the Bitcoin maxis, that he's sticking it to the traditional financial system by abusing it, using it to purchase Bitcoin with worthless fiat, and that's worked out pretty well for him. Actually, before we went into the live stream, I spent like the last 45 minutes like going through his purchases, Michael Saylor slash MicroStrategy. I'm gonna use them interchangeably because he presents himself. I'm sure there's more people that work at that company, but I don't know any of their names. It's just Saylor. And after I actually went through and did all of that, prior to this, I found that there's a simple website called SaylorTracker.com, which did all this for me. So that's what I'm going to use here. But this is a representation of all of the purchases of Bitcoin that he has made. One of the things I wanted to highlight in my representation, these are little green dots represent where he's bought Bitcoin. So he's been a very big DCAer, basically dollar cost averager, buying into it over the course of the last several years, starting in 2020, post pandemic. And the reason I wanted to do my own was because I think the things that stick out to me as a trader. See, I've been trading for a decade now, and I have made lots of mistakes, and I have made lots of good things, and I've learned what is good trading and what is bad trading. And I've also, through the benefit of talking to lots of traders, I have a Discord community, which I don't charge for. By the way, links below to all the social media stuff. I've come to understand a little bit of human nature. The reason we as humans are so bad at trading is because of our emotions, fear and greed. And we make some really bad decisions as our nature. And it takes a very special mind, a very rare mind to actually break from that. You also need, you can get around that with rules, trading rules, like writing them out. But when I look at his history of purchases, if we take him as a trader, one of the things, he started first with a $250 million investment right around the price of, $11,000 Bitcoin. That's good. I mean, that was a nice little period there in the malaise. It wasn't the former all-time high, and he bought it on the way up. Now, these are just the largest ones, 1,000 Bitcoin or more that I put in here. But his largest purchases of Bitcoin were February of 2021. That's where he spent over $1 billion. That was around 50 grand Bitcoin. And after this point is when he started making these podcast circuits. And this is where I start to take umbrage with his approach to talking his book. You can find clips of him, and I didn't pull them up, but they're out there, of him saying to mortgage your house, mortgage your business, just get as much Bitcoin as you can, after he went out and essentially doubled down, or actually in this case, close to double or tripled down on his Bitcoin. He started trying to get everyone else to buy his book. And, of course, it fell off in the summer of 2021, and then he bought the dip. That's the thing that a trader would do. But the thing that sticks out to me is your biggest purchase was at what was at that time a small pullback from the high. Now, how many times, if I'm speaking to you as a trader, if you have any experience, or if you don't, I'll explain. A lot of times when we look at a chart, whether it's Bitcoin or some kind of EV stock or a pot stock or something like that, that's just going crazy, and we're FOMOing, we wish we owned more of it. We get a pretty nice little pullback there, and we say, okay, finally I got the pullback. I didn't catch this one. Actually, there's some small purchases in there, but I didn't catch this one. But okay, now we're going to do it. And you feel really smart, especially if you get initially rewarded for your efforts like they did in the next couple of months. But then when it fails to really go up and now you're underwater completely on that purchase, now you get a little pullback and like, okay, well, now this is the dip I want to go in. So we put another $250 million into it. And then as it goes up from there, we're like, okay, that was the dip. We're good. We're on to triple digit Bitcoin, like I've been telling everyone on the podcast circuit. So we purchased another $500 million on the way up. And then right around when we get this little final dip, because in a trader's mind that's really bullish, they think, okay, this is the final dip before we actually go forward. We put another $500 million into it. And so when I look at this from a perspective of being a trader, I see someone that is making some really bad decisions. And there's decisions that are funded by other people's money. This was still in the 0% interest rate environment that, persisted. It wasn't until about December 21 when the first signs that world may be ending came on this bar right here. I remember it very distinctly because that was the U.S. jobs report on December the 3rd. Why would Bitcoin go down on the U.S. jobs report? Well, that's because they were good. And people presumed that the Fed would do as they had hinted they were going to do, which was start raising rates if the economy was good and inflation was high. And so when we think about all this money, remember that MicroStrategy, at least their last quarter and several quarters, we could probably pull that up, doesn't make money selling their software. They only made money doing financial engineering, creating convertible notes based upon their stock, which is how he's been funding recent purchases. He's been basically putting up shares of his stock to buy more Bitcoin, which the value of his company is based on Bitcoin. So it's quite an interesting little derivative is what MicroStrategy has become. But a lot of Bitcoin maxis, a lot of pro-Bitcoin people have been looking at MicroStrategy for the last few years as not only something to buy into, to believe in his vision of making everyone that buys Bitcoin fabulously wealthy. That is basically the point of Bitcoin at this point. I've heard people talk about things like hyper-Bitcoinization and the Bitcoin standard and things like that. But at the end of the day, that really takes a back seat to personal wealth generation. At least it does now. It wasn't the case back when I started posting about it in 2016. 2016, it was still a tool for human freedom. But now, what has Bitcoin been going up on? Bitcoin's been going up on this whole idea of a ETF, of traditional finance, institutional investment coming in. Well, how does that separate? How does that create a new monetary system? No one can explain that to me. People say that, well, we'll create a new monetary system when everyone uses Bitcoin. Okay, but I've talked about in the last few weeks my challenges to that. But now, though, as we consider the fact that there is an ETF on the horizon, we need to think about why people have been advocating to buy MicroStrategy over the last several years, the last 2 years, basically. It has been in part to support Saylor in supporting their bags of Bitcoin, in that he's constantly making purchases of Bitcoin, which shows his solidarity for it, even when we were in these depths of the winter, which now, according to people, is over. I don't know about that. But this whole rise in Bitcoin is entirely correlated with MicroStrategy's rise, because that's what the company's stock is based upon. And a lot of people have been using MicroStrategy stock as a proxy for Bitcoin. People that want to put it in their 401ks, their IRAs, people that want Bitcoin exposure have been using MicroStrategy as a vehicle for Bitcoin. If that's what you want to do, then MicroStrategy was one of the best options out there. GBTC, the Grayscale Bitcoin Trust, being the other one, but that particular instrument has had its own set of problems in that I don't know what the discount is right now, but it's had a lot more volatility to the downside. In other words, the inherent value of the Bitcoin that's held in the trust has not been worth it to the stock. It's been very undervalued compared to actually owning Bitcoin outright. And that's due to a whole host of reasons that we're not going to go into right now. But MicroStrategy has been one of the proxies that people have been used to trade paper Bitcoin. Well, now that we've got this ETF on the horizon, do people need to buy MicroStrategy stock to own Bitcoin? Well, I don't think so. I think that one of the great use cases for MicroStrategy stock as a vehicle is about to go away. And then there's the whole question of MicroStrategy's debt. Now, I can show some different statistics to paint a negative picture, like various analysis reports. I mean, if you look at MicroStrategy as any other company, as far as how much profit they make, which right now is none, and how much debt they have, which is incredible, it looks like a very bad company. But, people that want to support Saylor and support his vision will say, well, you can't look at it like that. Okay. Well, let's look at what actually I think and what I'm looking at into the horizon can possibly happen to MicroStrategy. So if we dig into their debt, they have different tranches, different segments of their debt that is coming due. And to be fair, they have staggered these out into the future in a way that gives them a little bit of time, because Bitcoin is volatile and Bitcoin goes through cycles. And that Bitcoin would go through a bearish cycle was not completely unknown to Michael Saylor. I mean, if you just look at the chart, you know what's going to happen. Just was. Maybe we should have bought a little less when it was all the way at the top, but who knows? We don't want to try to time the market, do we? Time in the market, right, with Bitcoin, because it's always gone up, right? But the first bit of debt, and they've got about 218 billion, 2.18 or $2,180,000,000 worth of debt. And the first bit of debt that they have that comes mature in 2025 is $650 million worth. And so the terms on that one, the maturity of the secured note will spring to the date that is 91 days prior, unless on that date MicroStrategy has liquidity greater than 130% of the needed to amount needed to pay off the convertible notes in full. So in other words, they'd need 650 million plus 30%. So let's see, 650 times 1 point. They need about $845 million. Oh, okay, sorry. I'll try not to talk directly into the mic. Is that better? All right. By the way, guys, if you have questions, if you have any comments, if you want to tell me I'm wrong, please put in the chat. And also, if you have symbols to look at or crypto to look at that might be mooning in this recent little bull cycle, post in the chat too. I'll give you my opinion. That's for the market update section that we'll do after I'm done with my diatribe. So he's going to need in 2025 about $845 million in liquidity. That's about half of what, the debt he's got on right now. Well, definitely less than half. Now, what is he going to do to pay that off? I am not one that thinks, how some people may have different opinions, that the Fed is going to lower rates significantly in the future by 2025. I think that 5% is probably the level that we need to keep in our heads for the bulk of this decade, the 2020s, because for historical purposes, it's actually pretty darn normal. And so refinancing this debt, which he has at very low rates, I think that convertible note we're talking about is 6 and maybe 1/4% or something like that. But that's a high risk loan that was taken out when the risk-free rate was basically 0. So the high risk loans that you would take out nowadays are definitely going to be in the double digits. So there's no way that we can really refinance that loan, basically. So one of the things that, he could possibly do is sell Bitcoin to pay off that loan, but that would violate his whole strategy of hodling Bitcoin. So what is the bet here? Well, I think the bet is that given that this is 2025 here, let me bring up the chart again of his break-even point. I don't think that it does a very good job. Let's see. Okay. So his break-even right now is sitting a little bit right at $30,000 Bitcoin. So for the better part of this year and half of last year, he was underwater. Now he is looking great. As long as Bitcoin goes up, as everyone that's very, very invested in it hopes that it does. We'll talk about the technical analysis of Microstrategy and Bitcoin here in just a second. And so, as long as he can sell off Bitcoin, basically if Bitcoin stayed the same as it was, he wouldn't have to sell off all that much. So 845 million divided by Bitcoin value, what is it? Let's say it's 37 right now. So he would have to sell off, let me do that math again. Needed 3 more zeros. 37. He would need to sell off only 22,837 Bitcoin, which out of his 150, it's not even that big a deal. But that would be quite an interesting dump on the market. And we're just assuming that the price of Bitcoin remains at this point right here. This is a pretty good point to sell Bitcoin above his break-even point. But he's going to have to service that debt in 2025. And to his credit, he gave himself probably an extra year after the halvening, which everyone brings up different charts. I'll bring up mine because I made it years ago, of how essentially in the halvening cycle, when you have the halvening happen, you then have a push up and then another push up. And then after you get about halfway through, you get into this period of malaise. And the last halvening, halvening 2, same thing. That was the 2017 run. And then, what do you know? The halvening kicked off the 2022 run. It coincided with massive money printing, which obviously by Saylor and others made its way into the Bitcoin price. But a lot of people kind of hand wave that away and just assume that it's because Bitcoin is scarce and it became more scarce. That's why it went up. I think it's more than money printing, which is a world we don't live in now. So it's an interesting proposition. Was the halvening cycle, the scarcity, the thing that makes sense from a academic economic perspective, is that why Bitcoin goes up? Or was it the freely available money? I mean, these are all open-ended questions, so we don't really know what the answer is going to be to these now, do we? So the assumption is that when halvening, which I looked it up, is estimated at April 20th, 2024, 420, not that far away, about what, 6 months away. When that happens, that's going to kick off the next exponential boom of Bitcoin. And a lot of people that didn't want to buy Bitcoin earlier in the year, it's kind of frustrating to me because what I've been trying to say using technical analysis through this year, there were some, people say the mantra goes, the best time to buy Bitcoin is today. The next best time, no, wait, the best time to buy Bitcoin was yesterday. The next best time is today. That's a really cool thing to say to get people to buy it. But the best time to buy Bitcoin this year was in January of this year, when it began to break out of the bearish trend on, was it January the 12th when I made a post for that? And the next best time to buy Bitcoin was March the 9th, upon the banking FUD, when the banks were all crashing. A lot of people say, oh, Bitcoin rose on the banks crashing. No, it fell first, and then it rose off of a technical level. And so those are the two best times to buy Bitcoin in 2023. But now we're getting into this very, very dangerous emotional cycle where the price has been rising. You have big green bars and nobody wants to miss it. And you got a lot of Bitcoin maxis on Twitter that are more than willing, because they've already bought their Bitcoin, to tell you that you got to buy it. You got to keep pumping that price. You got to just buy it at any price you can, because that halvening's coming and you don't want to miss it. I'm in a unique position where I don't care. I care about the technicals. I care about preserving wealth. I like to play around I like to follow Bitcoin, as I have for over a decade, but I'm not really too worried about missing out on it, because one of the things they said in this last Bitcoin bullish cycle was Bitcoin has never gone lower than the previous all-time high. Previous all-time high was 19,800, and we spent several months really proving that thesis wrong. Bitcoin is a very volatile instrument. Now, I went to a Bitcoin maximalist presentation this week. I still take in every opinion that I can to form my own. And they proposed something that was very interesting to me, that over the last 10 years, the Sharpe ratio, and for those that don't know, the Sharpe ratio is a mathematical statistical number that people use for portfolio construction. What it does is it tells you, is an instrument good to have in a portfolio relative to its volatility? In other words, do the returns make up for the volatility? And I found it very interesting. Even with all of Bitcoin's volatility, over the last 10 years, the Sharpe ratio for Bitcoin is 102. And one, by the way, is considered a good standard, a really good standard for a Sharpe ratio. It means that for the volatility you're taking on, you're getting very good returns. If you want to look up the formula, you can, but just take these numbers and one is good, okay? What you want to do with volatility is you don't want to take on a lot of volatility to get a little more return. You want to take on some volatility to get a lot of return. That's good. stock market over the same period, if you take the SPY, is something like, I think it was either 0.66 or maybe 0.63. Let's call it 0.66 to be generous. And then over the last 10 years, because it's been so poor recently, TLT, which is a proxy for bonds, what do you want to guess that is? You know, bonds are pretty non-volatile, right? But they haven't been going down. Well, actually, they're actually negative as of recent history. And so Bitcoin, in spite of its volatility, and of course this is a maximalist presentation, speaking the language of potential investors, and here I am presenting it as it was presented to me, is actually a good investment given the course of the 10 years. So it kind of speaks to that whole buy it at any price. It's going to go up, right? If you look back in history, that's true. But I just can't bring myself to do that because I really enjoy breaking narratives, especially when it comes to finance. I am always going to be distrustful of what people are saying. A lot of people love to go on what people are saying, and there's ample things for people out there to say it's bullish when it's bullish. But I can sit here and I can actually say, I had the good points to buy Bitcoin to act upon earlier in the year when it was at pre-20K, and then when it pulled back once again to just at 20K. Those are the good points to buy Bitcoin. Now you're in the danger zone. And don't let anybody tell you that things are going to be fine just because they have been. The things I've been looking at for Bitcoin are major resistance levels. We conquered one, which it held, provided a short for me, which I talked about for the months of summer, July onward. And I closed it when we started making this rise before we broke above that level. That was the level of 31,850, let's call it. The other 50% retracement level that we need to consider is higher at 42,235. If I'm going to be optimistic of this rally, that would be the number that I would look at actually. But what it's fighting now is the entirety of the COVID low to the all-time high from the underside and trying to conquer it at 36,400. And so that's the level right now that Bitcoin is challenging. And we're going to see if it closes above it this week. I've got to come on here and admit, as I promised I would, that if we get momentum out of the Ichimoku cloud on the weekly as the time we get price, and we're very close to it, probably might even get it on Sunday, then we have to consider that as a bullish trend on the weekly. And this is all happening in the context of the ETF about to launch. But I really maintain that the ETF launch is going to be a standard buy the rumor, sell the news type of event. When people tell me, the key thing around buy the rumor, sell the news is this. When there's a rumor something is going to happen, people buy it into that event. But once the event happens, what is next to get people to buy it? And like a lot of Bitcoin maximalist theory, there's a lot of contradictions. Number one, why is the ETF, if I ask, why is the ETF good for the price of Bitcoin? And the answer is because, boomers who can't figure out how to set up a wallet that want Bitcoin exposure, now they can buy it in their IRAs. Well, like I said, with MicroStrategy, you already could if you wanted to, but okay, look, that's a given. You know, they buy Bitcoin in their ETF because they want to have it. But why are they buying it? Well, it's because the halvening is coming up. Wait, do they know what the halvening is? Probably not. They can't set up a wallet if they can't understand what blockchain is. If they're just buying it for the price of it, I don't think they really care what the happening is. So there's a big uphill battle trying to bring these philosophies together to create a very concise bullish message with the target audience. TLDR, I think when the ETF launches, Bitcoin's going to take a dump. And it really just remains where that is going to be. Now we circle back to the conclusion when we talk about MicroStrategy. MicroStrategy this week hit a major level of 50% from its November 2021 high down to its low, either the double bottom of May of 22 to the December. 512.73. That's the level I have marked off, and that was the level that I took out puts on Thursday. Made a post about it first in a while on TradingView. And so I'm looking at this level technically for MicroStrategy to hold, but it's also a proxy to sell the news on the ETF. And also, I have my puts staggered out into time to potentially see if we can capture the downside of this debt unwinding. We'll see. If I'm wrong and Bitcoin goes up and everyone that bought it is rich, good job. But this is my trade for the week. And I've been looking at this for about 2 years now, about 2 years to see if this whole debt strategy, taking out printed money to buy Bitcoin, which I believe is antithetical to the Bitcoin ethos, is actually going to play out. There's a little bit of emotion, I'll admit, in that I really saw Bitcoin as a tool for human freedom outside of the financial system. And people like Michael Saylor, which are being vaulted as, heroes for pumping everyone's bag and making everyone rich, ostensibly, I think they have the greatest chance of actually destroying it for that purpose by fully entwining it with the existing financial system, which I think that battle's already lost. But this is a little bit of a technical setup based upon a crusade. I'll admit that. But whether you're long Bitcoin or short Bitcoin, it is a very interesting time to be either. All right, so if you have questions, if you have comments, or if you have symbols to look at, and we got to look at Casey's breakouts. He likes to bring us some good ideas. The reason I do this live stream every week is idea generation, because I can't look at every single stock that's out there. And so let's look at a couple of things, positions. Tesla is one that I need to talk about. This is a big play that I made back at 200 on that pullback. So got to talk my book there. I really like it when price does something like this, where earlier this week it comes back up to I do everything based on 50%. So let me take a step back. There's two things I trust more than anything else in price action: 50% retracements, like I did with MicroStrategy, and false breakouts. False breakouts are incredibly powerful. False breakouts were why people knew or should have known that Bitcoin was failing to break out in October and November of 2021. If something's going to go, you want that thing to make big green bars. See this? See this? Big green bars. That's what you want in a bull run. When you're coming up to an all-time high, you do not want to see something like this, where you have price make a high and then close back within inside the other high. Don't want that. And then, of course, 50% retracements. And within that, perhaps an even more optimal way to enter would be to wait for Tesla to do what it did on Thursday, which is do a little pullback here to 210 and see if it'll hold that minor 50% for even smaller risk if you wanted to. But just like the Bitcoin maxis are maximalist about and very, very solidly confident in Bitcoin, I'm a Tesla maxi. I love my car, and I think Elon is doing great things with the company. I don't even know why people want to buy any other EV, because you still have to drive that car. And it takes forever to charge unless you have Tesla supercharging. So why even buy anything other than a Tesla? All right, let's see. What else do we need to look at? Let's do a market look. Let me clean up things right here. So a lot of people got really, really flustered and scared by this move down, in spite of the fact that even at the low, let's see, where's January? Let's take it there. Okay. So at the low on October the 23rd, I believe it was, maybe in 24th, the market for the year, the stock market, this is the ES, let's do SPY. The market for the year was up. Let me find January. January 3rd. Where are you? There you are. Tuesday, January 3rd, right about there. So even at the bottom of the market, the SPY was up 7.5% at the lowest point on October 27th. So everyone was panicking, freaking out that the stock market was going to crash when really it had just pulled back to the average return in any given year of the stock market. Kind of puts things into perspective, doesn't it? And now, oh my goodness, do we actually have a bull market? Everyone's told me that we're heading into a recession and the market should be pricing that in. But man, they've been telling me we're going to be getting a recession for the last 20 years. All the experts have called probably about 30 of the last two recessions, if you read financial media or watch financial media. Interestingly enough, on this day, it triggered an indicator for me that I call my SPY PCS indicator. I call it that. That's because I take a put credit spread. But this is based upon spikes. Spikes, which I think are a very, very powerful tool, false breakouts. By the way, if you would like that indicator, do I have it on my thing right here? So spikes basically are an indicator that I coded up. Nothing really fancy, no secret to it. I should probably charge for it, but I don't. And unfortunately, I found out that some scammers were charging $100 for it. That is not fun to hear. I do not like people being scammed. I would be flattered that people think it's worth $100, if not the fact that I give it away for free. But back in October of this year, essentially this bar on Friday or Thursday, excuse me, Thursday, October the 13th, 2022, that was the CPI report. Boop, breaks the lows, comes back up into the trend. That's what I mean when I say that a false breakout is a very powerful tool, because everyone gets thinking one way and it goes the other. And so that little indicator in TradingView is free. You just need to hop on Discord and ask me for it. And if someone with my little troll doll icon message you asking for payment, they are a scammer. Tell them that they are an evil person and they need to go and do bad things to themselves. So that kind of so basically stock market, I think, bottom for October. October is a superstitious month for people. Let's see. But like I said, if you got things to look at, post them in the chat. We'll finish it up, but let me go through some of the things in chat. Did I get to all my notes, by the way? Let's see. Okay. I'm gonna leave my rants about the Coinbase thing out. Actually, Disney. I think a lot of people. Let me talk about Disney for a second. So, I'm not a particular fan of a lot of the way Disney has gone in the last couple of years, but I make it a point to keep politics out of my trading. I'm not saying that you can't trade on politics. It's just not been very useful to me, because the extreme examples are when, one president gets elected and the people that voted against them sell all their stocks and go to cash, and that didn't work for them, whether the president is one side or the other. I think that I've had to talk people off the ledge in recent times for closing out all of their retirements because of who the president was on both sides. And it's always been the right advice for me to give them, because it really doesn't freaking matter. If the stock market is good, the president claims it's good, and it's my fault. I'm responsible for such a good stock market. When it goes down, all of his opponents blame him for it, but it doesn't really matter. It doesn't. It really, really doesn't. And so, as in the case of Disney, I think a lot of people have been enjoying pushing this thing down as some sort of vindication for the things they don't like Disney doing. And what was really weird to me, and this is, I'm definitely a observer in investing, speculation, and trading of human behavior. And around the time of the summer, June and July, I started reading on social media lots of people wanting to short Disney. And, it makes sense. The price is going down. There's money to be made going down. But I couldn't help but notice that it's coming really, really, really close to the COVID low, a major technical level. And so just look at this chart right here. People are trying to short Disney at this moment in time. This is what they're telling me. They're like, I want to short Disney. And I'm thinking to myself, you realize that it's come down almost half from the all-time high. Like if you wanted to short it, if you were like Casey and you wanted to short it when it was doing a breakout maybe around here in April of 2022, once it broke down below a major 50% level, one of the things I believe in, like I said, is a 50% level. Once you breach that level, that's when I say that you enter into this, which I call the valley of risk. You don't know quite where that thing's going to stop. And you become a bag holder and you come on my live stream and ask me, what should I do with this thing? And I'm telling you, like, well, dude, I don't know. You probably should have sold it back here. And then you go and get into the time where if you sell it, it's going to bounce right back. At least you'll think that when you look back at it. Or if you hold on to it, it's going to keep going down. But in my mind, I think about PayPal, which I discovered, sometime into 2022 that I accidentally had this in an account, fortunately a small amount, and I closed it out. I didn't want to, so low. I mean, I bought it probably somewhere, in the 2020s, failed to act upon it when it broke that 50% in late 2022, and it's sitting there at 82. And so when you look at something like that, and it's now at the COVID low and below it, a lot of people are going to be, well, it's so low now, I just think I'll just hold on to it. But if you would have done that, then you're still down another 24%. No. That's the valley of risk. And so when I was listening to people talk about shorting it so close to the not all-time low, the COVID low, I just couldn't help but wonder, what are you thinking? Are you even pulling up a chart? And now, past couple weeks, it's kind of held. Earnings, I guess, were good. I don't, earnings can say good things and go down or say bad things and go up, but it looks to be responding to this level. I think a long of Disney might actually be worth it here in a short amount of time. Let's take a look at what it did this week. So, I mean, what I would look for is on this little rise up right here. Let's see if this week we can't get back down to 85 and put out a trade for it. I mean, that would give us a very nice trade back up to 98. That would be the first level of resistance. So yeah, I think this could be a very worthwhile trade to try to play that bottom on Disney. So, all right, let's go through some. If you guys have something to look at, I'm going to start going through chat right now, and we'll take a look at it. Looks like I got quite a few. Casey, I love you, man. I really, really do. But for the sake of time, can you do me a favor? Can you tell me what, and if you want to go, by the way, Casey posts his breakouts on TradingView, on the TradingView chat, which, by the way, I love TradingView. I stream it on this every week on TradingView, YouTube, and Discord. Links below. Casey, can you tell me what your highest confidence trades are? Or if they're all the same and they're all rote strategy, I respect that. But that's a lot to go through. So let me go through a few of them. Give me a couple of really good ones. You should know what I'm looking for right now, okay, Casey. Breaking out from major levels with a nice, good range to go. So pull those up if you can. All right, Stone Pilot, what's up? Kellanova. What is K for Kellanova? What kind of level is that? Or are you talking about K for Kellogg's? Oh, Kellanova, okay. Wait, that looks like Kellogg's symbol. Is it like they changed their name from Kellogg's to Kellanova? So, if I'm looking at this is what it seems to be, K. It is in a very multi-year range, and it's hitting a low. I could see you taking a long off this low. It's very messy, but on the weekly, hasn't quite conquered that red line yet. I would be looking for maybe a pullback. Actually, you know what? October 23rd, that low of the market, that probably would have been the level right there, because what you have is on the daily, it hits that level on October the 12th, 48.17, and you have that first impulse, and then there is the 50% that I would want to look for. I call this a Tinkinson TS recap. The red line I call the Tinkinson. I don't call it that. It comes from Ichimoku, but it's basically a 50% of 9 periods, which gives a little hack for finding the 50% of little trends. And so this would be a really good entry point here on 49.38. So probably, you got to tell me about these things. You got to come in here and tell me back in October. Because again, October the 23rd, I think that was that the market day? Was that the day the market did its bottom? Yeah, about Monday the 23rd. I remember that day. Everyone was worried that we were going to, I don't know, double-digit SPY. People start talking about it then. But yeah, I mean, I like it as long as it holds that level, as long as it holds this low. That's a really good textbook example of how I want something to hit a major level. In this case, a monthly low from 2019. Drill down to the daily, find that little pullback. And what that does in the way that I trade, because ultimately I've gotten to the point now where I'm becoming a little bit of a boomer, and I want to own companies. I want to own stocks just to hold them, kind of Warren Buffett style. Warren Buffett doesn't believe in trading, but you know, I think that his method of trading, where you can own a company and then tell it what to do, is a little bit different than mine. I don't think I'm going to be able to tell a company how to make money as well as he can. So what I'm going to try to do is establish positions in companies, and then if they work, if these companies continue to be good, then I'm going to benefit from it. And if the price goes down, I'm going to manage my risk, and that's how I'm going to do things. But what you can do as an initial push is take an entry at 49.34 and then take a little bit of profit at a 3-to-1 risk-reward ratio of 57.73. And what you could do is you could set up a stop to clear that low. And that gives you a nice little berth right there to sit there in a position as it goes up. Now, sometimes you just got to take it off that level. You know, there's a couple of positions that are doing really well. Few of the ones we talked about in our previous live streams. I've got it still noted right here. You know, when the recent unpleasantness in the Middle East popped off, first thing I thought of, because I'm a greedy capitalist, is defense stocks. I don't like it. I am very anti-war, just have been all my life. But again, I keep politics out of investing. And the people that are going to benefit from war are going to be defense contractors. And that sad event happened on October the 7th. And so in that live stream we did that week, we went through and we looked at what are the major defense contractors: Lockheed Martin, RTX, Raytheon, Northrop Grumman, NOC, Boeing, BA. And my friends, they like Palantir and KTOS, which actually now, if you look at Palantir, it's doing pretty good. But on that week, RTX, Raytheon, was right at the 50% level. Lockheed Martin and Northrop Grumman went up 17% on that news, on that the Monday after that happened. I think it happened over the weekend. But RTX had not yet moved until about 2 weeks later. And so we talked about it. And now off that 50% level, it's up about, what, double-digit percents? Very good way to start a trade there, actually. I'm still very bullish on defense stocks because there's not going to be a price put on the money that's going over there to Israel. Boeing. Oh, look at that. I think I already deployed myself in RTX, but look, Boeing comes down to the 50%, already had it marked, and it respects it. Spent a little time below it there, but look at that. Right off the 50%. I think Lockheed Martin was one I didn't like because of its false breakout up here. But the real winner, the real thing that makes you wonder why don't more people use 50% was Northrop Grumman. And Northrop Grumman, before the thing popped off, for the better part of a month, had been hitting its 50% level at 419, let's call it 420. And then when it happened that Monday, it popped up something to the tune of 10% a single day. Now it started to pull back, but that actually gives us an interesting level. This is why I don't chase things. Set an alert at 455.73 because we could be pulling back from that rally to another 50%. Watch that coming in next week. Northrop Grumman. Glad that Jen told me to look at defense stocks. But yeah, we should already be in RTX, and it looks like Northrop Grumman is pulling back for potentially another opportunity. Awesome. All right. Let's see here. Knock. Okay, I looked at Knock. There you go, Turk. LHX. LHX. L3 Harris Technologies. All right, I got to go out far. You getting a pullback? Okay, I'm with you. Let's go find out where the bottom is. It's kind of hard to say where the trend begins here. Things just been going up and up and up. This is going to be difficult. Here's another example of a spike. A spike indicating a potential pullback. I really got to go all the way back down to 1990 almost. We'll do two levels. I'll give you two levels. So we can either go back to the real big swing low, the multi-decade swing low, which is entirely valid. As a quick example, Amazon from its 2001 level all the way up to its all-time high, pulled back at the end of last year, this year, to its 50% at 94.46, which I've basically termed now the trade of the decade, or trade of the century, if we want to really get hyperbolic about it. That pullback for a company like Amazon was just freaking obvious. And it's not obvious in hindsight either. I do this every week. These are the things that I talk about. And they're not hard. These are not fancy technical indicators. These are just 50% pullbacks that you had to be patient and wait for throughout 2021 when everyone was rushing to buy things because I don't know what people thought in 2021. They were going to fail to get rich this opportunity and there was never going to be another one. Yeah. Anyway, LHX. I want to help people, and I appreciate everybody joining me. Let me say that. I don't want to be critical of anyone's trading journey. I want to help. And the things that seem kind of simple and obvious to me are from about a decade worth of looking at charts, beating my head against the wall, and figuring out what works and what doesn't. And sometimes I feel the need to be a little critical to people because it frustrates me how people fall into the same emotional traps. And if you can just take a step away from what people are saying and basing your investment decisions on what the financial media is doing, if you can just create yourself a set of rules for I'm going to do this, if this, then you can automatically put yourself a step above the rest. It's about having rules that make you ignore or at least take a step back from what everyone else is doing, which is losing money. So I hope that you can find value in these analysis and just showing you how I do things. That's what I really want to do in these live streams. All right. So back to LHX. Let's see. From 2009 to up to here, that trend gives us my retracement indicator 152.91. So Turk, I would say I'd be looking for 152.91 or 142.42, 141.42. But it's a tricky instrument. But I'm going to just be a little more patient on that and see what happens when it gets back down to those levels. So that's your alerts there. All right. Let's see what we got over on YouTube's. Apple. Yeah, let's take a look at Apple's. Oh, at Ekaterina, they're on TradingView. I've got three different chats because I'm multi-stream to three different platforms. Apple. Apple, I just don't think you want to bet against it. And I talked about this last week. I think you probably actually brought this up to me. So, again, one of the things I trust is a false breakout. And this, what Apple did, was not a false breakout because while it made a higher high in June of this year, when it made a new all time high in June, made a new all time high in July, those were nice, solid, bullish months. And it actually spent 3 months above that previous all time high before pulling back and starting to be a little dicey. But that's a lot different from the all-time high false breakouts of Bitcoin. It's a lot different from the all-time high false breakout of Lockheed Martin right there back in April of 2023. That's a false breakout. When you see something push above it and then within that month come back down below it. Microsoft is also another false breakout that, oh, look at Microsoft. Well, it was a false breakout, but now it seems to be going forward. Yay, tech stocks, breaking my rules. So, Apple, as I said last week, I don't think you want to short it, and I don't think you have a really good reason. And sure enough, now we're back up here. So, tech is a dicey thing. People make a lot of money on tech, and people lose a lot of money on tech if they buy at the wrong time. But Apple's not going anywhere as a company. So I would not short it. Looks good. Looks like Apple's bullish. I don't. Yeah, like I said, Apple breaking. Last time I asked you, said no short position. No, let me tell you something. I have been watching NVIDIA. NVIDIA did some false breakout shenanigans on me starting all the way back here on July. I have been watching NVIDIA every week since July for a short. And the August, excuse me, since not since July. July was where it made an all-time high. August, on earnings, it did a false breakout. But then the next week, it got up there a little bit, and then it went down. But it never really set up short for me. I didn't see any other false breakout. I didn't see any kind of Ichimoku breakout. I didn't see any 50% that I wanted to take. And so I have sat patiently and not shorted NVIDIA, even though I kind of wanted to, because I didn't see the kind of confirm setup that made me really want to go in short. And that's avoided taking a loss. And that's avoided taking any shorts in tech stocks. I would love to short these things if the opportunity's there, because with the volatility that makes them rise so quickly, they are going to fall very quickly. But it just hasn't come yet. So I can't see shorts in tech right now. If there is, I'm going to be there. I'll be shorting tech if I see it. But I've just been doing this long enough to be very, very picky, especially when something's going up. And that's why, going back to the original impetus of, this live stream, Microstrategy and Bitcoin. Bitcoin, I was short in July when it hit that level. Took a little bit of profit when it pulled back down to this level, not the whole thing. And then as it started rising up through here on the daily, it gave me real pause that I needed to not be short anymore. So I closed a short. Doesn't mean I went long. But it also means that I'm not trying to just randomly short this position on Bitcoin. MicroStrategy is a different case. MicroStrategy is a level that I've been looking at for a long time, so I'm willing to take it off this 512 level. So that's the kind of tech that I want to short. It's got something interesting going on, but like I was saying about the SPY, hitting this level in October, and everyone talking about a recession. Everyone's always talking about a recession. Like, even when we hit that October low, the stock market was still up the standard amount any stock market is in any average year. going back decades. That includes the ups, that includes the downs. It may be very possible, at least entertain the notion that we are, after the bear market of 2022, in a bull market. And you go short the bull market at your peril. And so you have to be very, very picky what you short in a bull market. And the most bullish stocks, which are the FANGs, well, I don't know if Facebook is an F anymore, but Apple, Amazon, Google, Netflix. Although Netflix, I do think is a worthy short, but that's another story. We'll see how that plays out now that it's come back to break even. But I don't think that you want to short Apple right now, no. Just my opinion, could be wrong, but hashtag bull market. All right, let's keep going through the things. We're getting close. Actually, we're past 5 o'clock, so let's finish up. If you got things to look at, post them in the chat. Am I missing anything on Discord? Stone Pilot says, thanks for your opinion on K, but the main reason why I think it's a good level, it's not because of the double bottom of May of 2019. It's because of the 50% retracement. Let me go back to K. Am I looking at the right thing for you? Oh, okay. I see what you mean. Yeah, okay. Good catch on that. I mean, that's all the way back from, yeah. Isn't it interesting that we're coming back on like some of these multi-decade levels? Okay. Well, there you go. That's some extra basis. Yeah. I mean, I still think that this daily entry around this level, 49.34. Okay. That's a good level, Stone Pilot. You know what? We'll take a look at this week. I'm going to make a note of that. Hold on. See, guys, this is why I do this. It's crowdsourcing ideas. I wouldn't think to look at Kellogg in this way, but you can benefit from Stone Pilot, as can I. I'm going to look at trying to get into this coming this week. I will. I promise you that. And we'll keep an eye on it. Keep plugging in if you want some questions, if you have some questions about it as it goes along. All right, let's see. Yeah, it's on my notes. All right. DFS, Discovery Financial Services. When you do this long enough, ooh, that hits a level that I've got marked. Thank you, Turk. Turk must be a returning viewer, because, or he may have asked this a couple weeks ago, but DFS also, COVID low to all-time high, already got it marked off, and looky there. This is why I do this, guys. This is why I do this live stream, because sometimes I miss things or an alert kind of falls by the wayside, but that's a trade on DFS. Right there. Tinkinson recap right off of a 50% level from COVID low to all-time high. That's worth a trade. Absolutely worth a trade. Absolutely worth a trade. Good job. Good job. All right. MS, Morgan Stanley. Another good looking out. Somebody's been listening to what I've been teaching. I'm happy. Here's another example also of a false breakout. See that February 2022 spike right there? Just put that in your mind as this is when you short something. Wow. When you have like a nice little consolidation there that breaks out. I don't even know if that was earnings, or I don't know what that is, but that price action right there, I don't care if it's Morgan Stanley, JP Morgan, or any other multi-billion-dollar company. That price action, that's a short. But now you're coming back down to the 50%, 68.47. Crowdsourcing ideas, getting some value. Good job. All right. All right, let's finish up the chat, guys. Let me make sure that I'm not ignoring Jen over here. He's pinged me. Hold on. EIS, yeah, okay. Kellanova and Kellogg split. Okay, I see. EIS after defense. Okay. Oh, sorry. You asked about A&F? Okay. Let me look at A&F real quick. Abercrombie and Fitch. I think if you asked me this last week, I probably told you no, because it has not yet given you. It's not yet. Yeah, I've got this marked off. So 78.25. That's the high from 2011, and then the all-time high of 2007. It's just ripping. And if we did that last week, I hope you didn't short, because now we're up again. Here's what you want to look for. Go down to the weekly, and the first thing I'm going to look at when I'm trying to short something is it to breach that red line. This is the Ichimoku Tenkan-sen. If you want to put Ichimoku on your chart, that will give you that red line along with some others, but we're going to keep it very simple to that one. That is the first thing that I'm going to look for to good. That's the first thing I'm going to look for it to break that trend and give you a sign of weakness. And so far on this weekly chart, no, it's been going up since it broke at May earnings this year, has not been violating that level. And so that's also why when we look at something like DFS, the same rule applies, where on the daily, it's going down, and you start to get violations of it. That's when you can start to get a pop up. And so that's why you want to wait. So the Abercrombie & Fitch is just really strong. You got to wait for it to show some weakness first. That's my way of looking at it. All right. Okay. My brain cells are starting to fade. So let's EIS. EIS is Israel. Nah, honestly, I'm just gonna avoid that. Like, I don't see a level. In fact, hey, look at that. You should have been out of VIS. Again, there's your 50%. Broke it, close your position, comes back up, holds that. This is actually, I'm glad you brought that up, because, see, I don't know if I can use this as like a textbook example because of the loaded nature of the underlying that it's covering. But this is a textbook example of when, I think, what's that? Is it AMD? Let me see. AMD is one that we've been looking at for a couple weeks. Yeah, AMD is one of these where it came up to that level, held it, but man, this is a really textbook example of where price hits the 50%, breaks below it, and then comes back up to test it as resistance. After it comes down, hits it as support, breaches it, you need to be out of your long, comes back up, maybe gives you a second opportunity to get out of your long, and then down it goes from there. And so all this price action happened, all this price action around the 50%, telling you this thing was going to go down, happened in July and before any of this happened. When people come and say like, oh, EIS is down on news. No, it's down because it had a chance, it had multiple chances to hold its support at 58.46, came off of it, couldn't quite conquer it, breached it, confirmed it as a resistance, and then almost 3 months later, finally actually tanked off of that on something that happened in the world. Technicals front run the news. I really believe that. Because once the news is transpired, look at that gap. You couldn't take advantage of it. But going back to Northrop Grumman sat at its 50% retracement level. Its 50% retracement from January of 2021 up to its all-time high of 2022. Yeah, it's all-time high. And it sat there, hit it in September, hit it again at the end of September, hit it that week right before everything happened, and then upon the actual thing happening, it popped up almost 17% off that level. Technicals front run news. Can't trade on news. You cannot do it. Doesn't work. All right. Let's finish up. All right, and then I'm going to look at quickly through KCs if I see some symbols I want to look at. Let's see, UPS. UPS is breaking out. Is UPS on your list? Yeah, UPS is a short. Yeah, that's what did we just look at with EIS? EIS, same thing, comes down 50%. It kind of tries, breaks below it. The best thing you can hope for or look for is maybe for UPS to pull back up to 157.86. But that's a breakout that I know Casey would like. Casey, you got that on your list? I bet you've had that one in the past, haven't you? You probably got that already. I think we have brought that up. You're probably short from early end of October there, I think. All right, J&J. Johnson & Johnson is right at this level. I think we did talk about in Discord. If you want a very low-paying dividend, low volatility stock, you can go for that. I already have some J&J from years ago, so I don't really plan to add to it at this point. But that's at a 50%. Absolutely. AVGO. AVGO. Told you guys. About an hour in, that's why I start to look towards the end. My brain cells start to get a little mushy. That's a breakout. That's a breakout. Do you have AVGO on here? You do. You do have AVGO. That's a good breakout. And you have a nice, solid green weekly bar. That's what you want to see. Now, you got earnings coming up. So that's kind of a... But you got a few weeks from now from earnings. So that's the top thing. And that's a good breakout. Nice little consolidation there that you have a good, solid week to finish out and close above it. So very bullish. Tech is just ripping. Tech is just ripping. Man, it's. I need to go back and do some sector analysis, sector rotation analysis, but it's all wonky now because tech is supposed to lead you out of a bear market, and I guess it is. I guess it's leading us out of the 2022 bear market, and so we're at the start of a bear market if you believe that tech is leading and that follows sector rotation. All right, so Adobe. Oh, ADBE. Thank you. Have a great week yourself. Breakout looks good. Nice room to the top. Chesapeake Energy. I think that's what CHKP. I haven't seen that in a while. Or Checkpoint Software. Okay. Not much room to the top there. Copart. You know, I was watching a YouTube of a guy that runs a used car lot talking about how car repos are really going up, and people are starting to try to walk away from their cars that they bought at premium prices, like 10 grand over a year ago, and now they still owe more on their used car than people can buy a new car for. Not a good situation to be in. I hate it for them, but what can you do? There's a good example right there of a 50% from the COVID low to the all-time high, as it were, and it made in 2022. That's a breakout, breaking out of consolidation, making new highs. HLT, that's not HLIT, Hilton, not much room there to the top. LIN, I'm skipping a little bit. New highs, can't say anything against that. Microsoft, all right, let's take a look at that. I think I used that as an example there. Let's see. Yeah, good solid level, breaking that high. Yeah, I mean it's doing what I call a spike breakout, where it makes a spike and then it actually triggers the stop on the spike. So if it gets up to 372 next week, that's triggering that spike. It's hard to really look forward and see, wow, things have gone up so much. How could they go up anymore? But I mean, people have said that for years. But Norok, reasons, inflation, Fed, debt, war. But bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. So have a nice weekend, everybody. I'm going to cut out and get some dinner. I hope you have a good one. I'll be back next week. When is Thanksgiving week? I may, yeah, we'll see how Thanksgiving. Next week is the 17th. I'll be on for sure. But otherwise, have a good weekend. Trade wisely. Links are down below if you want to keep following. So, thanks. Have a good weekend. Bye bye.